it's recording. All right. Yeah, I think folks are good. Oops. Okay. All right, so we're gonna go ahead and get started. Thank you all for being here, and sorry about the technical things with the link on our website. Hoping folks saw the email. We are super fortunate to be having Canvas Credit Union here today to talk about student loan strategies. I think that this is a very important topic that a lot of our students in our program who are getting ready to graduate in the next 2 semesters have really wanted to talk about. And we had Canvas Credit Union last semester also do a budgeting workshop with us, and it was awesome. And so they're gonna take a lead in this presentation. Students, feel free to jump in. We'll have some engagement opportunities. The more engagement from you all, the more we can help with any just questions and things that come up in the conversation. Feel free to use the chat. George and Nancy, who all have introduced themselves here in a little bit, will be also helping with the chat. I'll be looking at them myself. I'll be recording as well so that we can use this for our website for students who couldn't make it today. So just know that will be happening. So I want to pass it over to Nancy and George if you all want to introduce yourselves.
George, why don't you go ahead?
Absolutely. Well, thank you so much for this opportunity, CSU, and this relationship that we have as well. Like Dan said, my name is George Hill. I'm the Director of Financial Education for Canvas Credit Union. I partner well with Nancy as well in our community involvement, and I'll let Nancy go ahead and introduce herself.
Hi, everybody. I'm Nancy Patton with Canvas Credit Union. We're super excited to be here with you today. This topic is kind of ugly, is that a word? So please ask questions while we go. We're planning to talk about student loans. And I want to ask you guys some questions about your situation. So I'm hoping that you are comfortable either unmuting or chatting. With such a small group, I'd actually prefer that you unmute and just answer some questions that I'm going to throw at you. And please, this topic is challenging to understand. It's challenging for everyone to understand. And so please ask questions. If something doesn't make sense, please get clarification. So I'm Nancy, George is on chat. Diana, thank you so much. And let's jump into, I want to ask you a couple questions. So just unmute and tell me some of the ways you're paying for college. And I'll give you some options. One would be you had savings. One would be that you're working a job. Maybe you got some grants and scholarships. Is your family helping you? Do you have student loans? So somebody talk to me about how you're paying for college.
Hi, my name is Monica. I have been paying for school with student loans. I had scholarships for the first couple years, and then I also have an Alliance scholarship from the high school that I went to.
Awesome. And what high school?
Adams City. It's down in Commerce City.
Yeah. Oh, that's awesome. So they have a special program to help you out. That's fabulous. Anybody else? How are you paying for college?
I'm Tatum, and I'm also on a similar track with scholarships and student loans for the remainder of it.
Cool. And I saw chat light up. Anybody have anything in there that we should share? I
work a little bit.
Yeah. thanks for contributing that. That's an important part of the puzzle for a lot of people.
Yeah, Nancy, I'm just typing everyone's answers in the chat so they can, in case they can read them as well.
Oh, well, I'd prefer you read them out loud so we can all hear.
Oh, yeah, well, Tatum said scholarships and student loans. Monica, student loans and scholarships.
Okay. So in other words, it takes a wide variety of ways to do that. But most of you have loans, so that's why we're talking about this today. I'm wondering if you also have a word you could use to describe how you feel about the fact that you're going to have to start paying those back. So sometimes people are scared, sometimes they're angry that they have to pay it back, sometimes they're confident that they can do that. But how do you feel knowing that you're going to have to start paying back your loans once you're done with school?
This is Tatum again, and I would use the word overwhelmed just because along with everything else after being a recent graduate. But I'm confident that this talk will ease that overwhelming feeling.
And that is a fabulous word. Thank you for sharing that.
Right now I feel a little stressed just because I'm getting constant emails on how to set up my account and start a payment plan option. So pretty stressed.
Also a great word. Okay. Well, thank you guys. Thank you for contributing. It gives us a feel for what we're trying to solve today, which is to make you much more comfortable with the system because it's a complex system. And I've been doing this for several years now, and it's still a complex system for me too. So here's what we're planning to talk about is we'll just go over some statistics, what's going on in the big world of student loans. And then we'll talk about the loans that are available. You should be able to recognize the kinds of loans that you're in. We will talk about things like income-driven replacement plans and public service loan forgiveness. So hopefully you'll understand better about how those programs work. And then I want to let you know that along the way, I'm going to reference a bunch of websites and everything, but the last slide in the presentation will have those websites listed so that you'll be able to either take a picture of that last slide or we'll send out the PowerPoint afterwards for you to reference. So if that sounds okay, let's jump into it. I didn't wait for an answer, I just jumped into it. So hey, the numbers around again having student loans are real big. It's now the next biggest thing besides mortgages. So there's just so many dollars out there in the world of student loans. Lots of people, 45 million people who have student loans. And, you know, in a graduating class, almost 70% of students come away with loans. Plus there's a pretty good chunk, like 14% of parents have loans. And they aren't just for your undergrad. A lot of people are getting them for graduate work as well. So, so there's a lot going on, lots of debt out there. One of the trends we're seeing is that people are getting those loans later in life. Maybe they're reinventing their career. Maybe it's because they're staying in grad school longer, but they aren't starting to repay loans until later in life. So that's a trend. And then this was interesting, and I don't know how it's going to be impacted by COVID, but for a while when the labor market was super tight and everybody was competing for workforce, there were employers who were actually offering to help you pay your student loans. It was a benefit, just like getting paid time off or a 401 contribution. They were offering to help pay student loans. So it wasn't very many companies, but it was a growing trend. And now with COVID, I don't know what's going to happen. In Northern Colorado, it's still a pretty tight workforce. And so it's possible that around here, this may still be a deal to look for. Anyway, there's some hope, huh? You're not alone. And you know, it's so frustrating. You have these student loans because it costs so much to go to school. Well, why are people still going to college? Because it's still proving to be a worthwhile investment. The percentages of people who are working instead of being unemployed, it's always higher for workers who have a college education. there's higher job satisfaction. So, and plus the higher earnings. There's multiple reasons why people still are willing to go into debt for an education because the benefits are still there. And we talked about how to pay for it. You guys are already doing a bunch of these things. I do want to make you think a little bit about if you're going to continue your education and continue to take out loans. Think about some other options like working for an employer for a couple of years and finding a position that has employer help with tuition. If you work for a university like Diana does, there's either free tuition or reduced tuition. And, you know, serving in the military, or you can serve with AmeriCorps and you can have help paying for college. So just stay flexible about the ways that you might go about future education once you've got this one done. And is everybody graduating like May, December? When are we graduating? How soon?
In May.
Yay. Anybody else?
December.
Okay. So we're close, right? Congratulations, that is so awesome. It'll feel good to move on to a new stage of your life. So here's the things that we've talked about that you start with when you're paying for school. You know, obviously you go for the free stuff first, you got your grants, you got your scholarships, and then we move down to, now I'm gonna take out a loan because I don't have enough with the other methods. And now we're in the section that's not free. Now I have to repay it. So let's take a look at these amazing loans that you guys have and or are considering. At this point, about 95% of those student loans that are out there are from the federal government. The vast majority of student loans are backed by the government. The money comes from the government. And then only 5% are from private lenders. Does anybody have a private loan in addition to their federal loans? I'm going to take that as no. And that's good at this point. We'll talk more about that. But private loans are more expensive in a couple different ways. So yay, if you were able to keep your lending with the government loans. These are the names of the current ones. They're all called direct subsidized, unsubsidized, direct plus, direct consolidation. And so those are the loans that you'd be getting if you were to take out a loan today. And probably that's the name of one of the loans that you have, or several of the loans that you have. So I don't want to be discouraging, but does anybody know the interest rate they have on the loans right now?
I don't know.
Couple years ago, if you took your loans out a couple years ago, they were running close to 5%-ish. Loan rates just dropped. So if you were to get a loan today, the lowest loan rates available are 2.75%. So something that you guys might want to be watching for is the option to do some consolidation and see if we can get the interest rate lower because loan rates have dropped recently. So just throw that in the back of your head. But if you were to get a new loan today, the loan rates are lower than they were several years ago. So let's take a look at, just like when you got grant money or scholarship money and you start with the free money before you move to having a loan, it's the same thing with loans. You start with the cheapest one before you move to the most expensive ones. So in this case, the least expensive loan is a direct subsidized loan, but you'll notice it's only for undergrads. So there's some reasons why sometimes people can't have one of these because they're a graduate student. But that's where you start with direct subsidized loans. And those are at that lowest interest rate right now, 2.75. And there's no credit check. The interest is deferred while you're in school. These are all positive things about the loan itself. So the next thing, yeah, go ahead.
I have a question. Well, it's like a hypothetical situation, kind of. Could you, like, say you didn't need a direct subsidized loan, like say you had your college paid for or whatever, and you took out a direct subsidized loan and put it in a high interest savings,
You work
right?
in the system.
Right, and then as soon as you're out of college, since you're not getting charged interest or anything, you pay it all back. You take it out of your high interest savings, pay it back, and then you just keep the interest that was occurring over the last 4 years.
So these are needs based, and you
Okay.
would have to, they wouldn't give you the loan unless you showed that you needed the money.
Okay.
So that would be the caveat. I have to tell you, you're not the first person to think of that.
Okay.
But in general, just as basic financial advice, because we don't know what the world holds ahead, and we certainly have learned that in the last 7 months, we don't suggest borrowing money unless you really need to, simply because we don't know the future. And it's a really uncomfortable position to be in, to borrow money and then have your world turn upside down and you can't pay it back. So for what it's worth, I don't think you'd earn that much to make it worth the headache and the possible uncomfortable feeling if something goes sideways.
Yeah, that makes sense.
Yeah, no, thanks for bringing it up though. And I love it. Keep the comments coming because that's fabulous. So then the next group of loans is the direct unsubsidized. Now there's some things that aren't as good. Interest is accruing and the interest rate got higher with that. If you're a grad student, the interest rate went up. But so as you move down the chart and you move into the plus loans, now the interest rate is higher. This is for parents and graduate students. So the point of this is that you start with your cheap money, your best loan deal that you can get before you move to a different loan type that is going to cost you more. Okay. So I think the other thing I'm going to comment on those direct consolidation loans. Over the 4 years you've been in school, you've probably taken out multiple loans. And depending on what was going on with interest rates at the time, you might be in some that are 3% or 5% or 7%. And it might be helpful at some point to put some together and get a better interest rate. And we'll talk you through how you might think about that. But that's what the consolidation loan is for. Okay, any questions on those basic loans? Those are all federal loans. You should probably have one of those, is how it's set up. This is how it's supposed to work when you get a student loan. You are supposed to fill out your FAFSA, be told this is what you qualify for. You make your decision about where you're going to go to school and how much you're going to borrow. You attend school, you get your degree, you get a job, you pay back your loan. Easy peasy, done. Okay, so it usually doesn't work that way, but that's how it's, yeah, but that's the theory. That's how the program is set up. Okay, so let's talk about what really happens. What really happens is that you get stuck in a loop of going for several years. Maybe you end up taking a year off or two to do something because you run out of money or you want to establish residency or whatever it is. Life happens. And so you're in that loop for a while until you finish and get a diploma. And then you're supposed to go find a job, except maybe you graduated like 10 years ago, you know, there weren't many jobs because of the recession 10 years ago. So life happens there too, as far as boom, you're just supposed to go out and get a job. The theory is you've been assigned a loan servicer, and that's probably who you're getting these letters from. The government assigns your loan to a loan servicer, and that's the company that you're going to pay your loan back to. You don't write a check to the federal government to pay back your loan or set up an automatic payment. You make your payment to the loan servicer. You're supposed to do that until the loan's paid off and everything's great. What happens, of course, is that life has shown us that things don't go quite that way. And so instead of just paying your loan servicer and getting the loan paid off, sometimes we go sideways there over to Plaid Shirt Guy. Plaid Shirt Guy is having a moment, just like a lot of people do. And now you have to work with your loan servicer and come up with a new plan so you can get your loan paid off. So I hope that made sense, but sometimes your loan servicer will help you come up with an alternative plan. And I'm not talking about robbing banks. These are all legal, cool programs approved by the government to get their money back. And the goal is the same, the loan's gonna be paid off. It's maybe just not quite as simple as you thought it would be. Okay, so that is that question. I'm gonna ask if anybody has ever heard of the National Student Loan Data System, NSLDS.
I have it.
Now, this is the, unfortunately, world's best kept secret about student loans, and it is the a fabulous place for you to keep track of what's going on in your student loan world. So it's not about private loans, it's about government loans, but that's what you guys have. The National Student Loan Data System is one place to go and see all your loans. And you'll see the interest rate, and you'll see how much money is left that you owe, and you'll see who your loan servicer is. All the information in one spot. So as you graduate and are assigned a loan servicer for your loans, and you start keeping track of the situation, this is where you want to be. And speaking of the loan servicers, I've referenced those a couple times. That's the company that's been assigned to receive the payment for your loan. There are only about 10 of them, and you've probably heard of the most popular ones: Nelnet, Great Lakes, Navient, Federal Loan Servicing. These are the most popular ones, the biggest companies that do this. And so you will be assigned, though, your loan should be paid back to this company. And then keep track of all that stuff through the National Student Loan Data System. Questions on any of that? Everybody cool so far on that? Okay, so remember Plaid Shirt Guy, here he is again. Life happened, and we're having trouble, for whatever reason, having trouble paying our loans. So I don't want to set you up to think that you will have trouble, but chances are there'll be something in your life over the next few years that interrupts how you go about paying your loans back. The pandemic caught a lot of people off guard, but you know, just real life happens too. So the next slides that we're going to go through are all about the different programs that are available to help you get through a challenge. And I want to explain also what the default is, what the normal repayment looks like before we move into those alternatives, those creative alternatives that are there to help us. So, ready? If you get in touch with your loan servicer and they say, here's your monthly payment and here's where to send it, it's been based on a 10-year repayment plan. That's the standard. You have your chunk of money that you borrowed, you're going to pay it back over 10 years. Divvy it up month by month, send it here, and you'll be all done. If you can do that, that is the way to pay the least amount of interest. So the lowest expense on your loan is through the standard plan, 10-year repayment, boom, send it off every month and get rid of that thing. If it's a larger dollar figure and you're having trouble making those payments, there are a couple options to help, and your loan servicer is supposed to help you figure out if this is a good fit. Okay, one of them is to extend it. Anytime you extend a loan, you're paying back over a longer period of time, and that drops the monthly payment, but it also increases the amount of interest you pay. So it's a trade-off. You get a smaller monthly payment for a longer period of time, and it costs you more in interest. You'll notice on that extended plan, instead of 10 years, it's 25 years, but it also has to be a higher loan amount. You can't get that 25 years if, say, you only borrowed $10,000. Okay? Then the graduated concept is interesting, it means that you're going to start with a smaller monthly payment for the first couple years. And then after a couple years, your monthly payment's going to be higher. And a couple years after that, your monthly payment goes up again. So the concept is, as you get started in the job world, your income probably isn't as much as it will be in a few years. And so your monthly payment is lower at the beginning. And then it keeps going up over time. That one also is for 10 years. And I just want to be sure everybody understands extending the term and graduated payments. Okay, those are a couple options your loan servicer could put you into if you were having trouble making the monthly payment. Cool?
Yes.
Okay. Consolidation loans, I mentioned before, when you have a whole bunch of different loans and a whole bunch of different interest rates and dollar figures, sometimes it makes sense to put them all together into one loan. And again, your loan servicer should be able to help you figure out if that's a good solution. Okay. Who's heard of public service loan forgiveness? Give me a thumbs up or something. Somebody tell me they've heard of public service loan forgiveness. Got a yes?
Yes, Nancy, this is Diana. Yes, I tried to do this when I graduated from grad school.
So the public service loan forgiveness program is incredibly complex. If you think student loans are complex, this particular repayment program is really complex. So we are going to talk about it. But to set it up, I have to talk through income-driven repayment plans. I'm so sorry that you have to listen to this. But again, what people discovered is they were having trouble making their loan payments. Something's going on in their life and it's really hard to make your monthly loan payment. So they came up with income-driven replacement plans. And what this does, you'll notice that the term is now longer. Instead of 10 years, this is stretched out to 20 or 25 years. There may be an amount of money that is forgiven that you don't have to pay back after you pay for 20 or 25 years. But in the meantime, when you're in one of these programs, you have to submit every year what your income is. You have to talk about your family size, and you have to resubmit every year new information and say, yes, I still need to be in this income-driven replacement plan. So your loan servicer is going to help you figure out which one to plop you into. Some of them, you may be taxed on the money you're forgiven. And that catches people by surprise sometimes. So these programs exist to help you get through the, I can't afford the monthly payment. And the other thing that these programs do is allow you to participate in public service loan forgiveness. Okay, so before I go on to public service loan forgiveness, I just want to be sure if there are any questions about income-driven repayment plans. Again, the concept is you've had trouble making the monthly payment, and so your servicer helps you go into one of these plans. You've extended the term. You have to communicate every year about what your circumstances are. And theoretically, after 20 or 25 years, because your monthly payment has been so small, there's a chunk of money that you still owe, but they're going to forgive it. You won't have to pay it back. Any questions about these?
Is there any, like, I don't want to say punishment, but like if you don't like pay anything else back after that, if only part of it is actually forgiven, what about the rest for that?
So the way they'll figure that out, so let's say I'm your loan servicer, you talk to me, you say, I'm having trouble making my monthly payment. We agree that you should be in an income-based repayment plan. So now we're going to make your loan last for 25 years. Every year you have to submit your information. Hey, this is how big my income is. This is how big my family has grown. And then after you've paid for 25 years, there will still be money left over that you owe, and it will be forgiven.
Oh, okay. That makes more sense. Thank you.
Yeah, and it's kind of a hard concept to wrap your head around. So if that helps, you're going to pay for a long time. You're going to have to prove things up every year, but there will be a chunk of money at the end that you haven't paid off because your monthly payments were so low, and that will be forgiven. The trick is you might be taxed on that money.
Nancy, I have a question. This is Vienna.
Yeah.
Are folks who are on these plans, are there loans, like everyone gets their loans forgiven if they're paying? What if people miss some payments, or what if after a few years, like 5 years, the information that you have to resubmit every year, if it doesn't qualify you anymore, what happens?
So your loan servicer is going to talk you through what the options are when things change up. Most of the time, you'll notice that it says your payment will be like 10 to 15% of your discretionary income. So if you started out at the beginning of your 25-year repayment and your loan payment was only $100 a month, and now your income has grown, maybe you're still single, you didn't have any kids, and so your loan payment is still going to be low, but it's not going to be as amazingly low as before. Did that help?
Yeah, that is.
Yeah. So they're going to adjust it every year. So that, yes, and if you default, if you don't pay, there's some bad things that happen. We'll talk about that at the end. We'll save the worst for last. But yeah, the concept is you need help right now because of income. So we're going to come up with a way where you're still paying some money back, but it's not the traditional, original 10-year plan. Okay, keep in mind, we're about to switch over to like public service loan forgiveness. You have to be in one of these plans that you see on this screen in order to be in the public service loan forgiveness program. Okay. There's 4 programs listed on this slide, and I'm going to touch on the first 2 before we jump down to the interesting ones. But deferment and forbearance, the concept here is you're having trouble on your monthly payment, but it's related to a particular circumstance. You got deployed in the military, you lost your job, you had an illness. Something happened that you're having trouble making your loan payments, but it's a short-term thing. It's not a lifestyle 20 years worth of situation. And so there are 2 programs, deferment and forbearance, that can be, you can be put into to help you through a short-term challenge. And so for instance, during the pandemic, the government stopped asking for loan payments. If you had student loans due in the last 7 months, no payments needed to be made. They just automatically put everybody into forbearance. So instead of it being a nationwide thing, normally deferment and forbearance are that I had a situation in my life, something's gone wrong, I need a break for 6 months until I can get back on my feet. And they put you into one of these programs. Okay. Now we're down to public service loan forgiveness. And I'm actually going to start with teacher loan forgiveness. Is anybody studying to be a teacher? No teachers. Okay. The concept is if you are a teacher and you're teaching in a low-income school, you can have some of your loan forgiven, taken away. You don't have to pay it because of what you're giving back to society through teaching in a low-income school. The concept is the same with public service loan forgiveness. The theory is that you're going to be at a job that probably pays less because it's a public service job. You could be a firefighter, you could be a policeman, you could be any form of government work. federal, state, county, city, any kind of government work, then you qualify for this. There are some hospital systems that qualify for this because the nonprofits qualify for this. If you go to work for Habitat for Humanity, you're not going to have the same income you get if you go to work for some large construction firm. And so they're rewarding you for your service back to the community by giving you a break on your student loans. So public service loan forgiveness is based on the concept you are giving back to the community somehow through service. And so in return, we're going to forgive you some of your loan. It has very specific requirements. And so first of all, you have to be in one of those jobs. You have to have these federal student loans. It's not good on private loans. You have to be in one of those income-driven repayment plans. And you have to pay for 10 years, 120 payments. And after you've made those 120 payments, the remaining amount that you owe is forgiven. So it's proven to be a little tricky to manage tracking this. But if you are thinking about going into a job where your employer is going to qualify for this, you should be very careful to be doing some documentation, very careful to get into an income-driven replacement plan, make every effort to make those 120 payments. It has to be a full payment. It has to be on time. It can't be late. Okay. It does not have to be consecutive, however. So if you wanted to work 5 years for Habitat for Humanity, and then you took a couple of years off and worked some amazing private job, and then you went back to a city job for another 5 years, that would get you your 10 years of payments, but you had a little break in the middle where you weren't working for a qualified employer. Okay, usually this one gets some questions. So depending on what your major is, depending on what you're thinking about doing with your life, you may qualify for public service loan forgiveness. And a lot of people get into this and get very confused. So I'm hoping to solve some issues before you get confused. Was there a question? No, we're good with public service loan forgiveness?
Well, working in higher education also qualifies folks into this.
Yes, the university, working at the university does. Now, if you were to work at, say, Notre Dame, that's a private school, not a public school. And so now there's a distinction, and that's not going to qualify. Like with the hospital systems, if you work at University of Colorado Health, they are a nonprofit hospital system. If you work at some other hospital systems that are for-profit, even though it's the same kind of job, it's not the same kind of employer. And so it would or wouldn't qualify. So yeah, couple things to really watch for on this one, but it gets talked about a lot. People are like, oh, I'm just going to get a public service loan forgiveness thing. And it's just, you just need to be sure you understand what the requirements are. It's an amazing program. You can have a lot of money forgiven. And this part is not taxed when you do the public service loan forgiveness. But there's some rules to make sure you're following.
Nancy, this is Vienna again.
Yeah.
I had a question about the public loan forgiveness. I'm a part of this, and I have heard other people who are a part of this as well, unsure about if maybe their loans might not be paid if they're not doing payments right now, since everyone is on like deferment. Basically.
Right. So you should be fine. Okay, as long as, I mean, this was a government enacted deferment, and now you still need to pay. You've lost a few months by not paying. If you thought you were going to be done at a particular date, now you're going to have a few months to make up at the end. So it's, there's no punishment for not making payments now during the COVID break, but you still have to have those 120 payments. Did that help?
Yes.
Okay. So yeah, 120 on time, full amount payments while you're working for a qualified employer. And, you know, that's sort of it.
So would you want to try to get your full amount, like your monthly full amount down or whatever?
No, so remember I said you have to be in one of those income-driven replacement plans? And the reason you have to be in one of those plans is that's what drops your monthly payment so that there's an amount to forgive at the end.
Okay.
If you stay in like your normal repayment plan, there won't be any money left to forgive at the end.
Yeah, that makes sense.
Yeah, I know. This stuff is, I think this stuff is very complex. And it just, to wrap your mind around stuff, and the fact that when you are in those income-driven replacement plans, your monthly payment is so low, your loan balance will go up. You are making on-time payments as agreed in your plan, and your loan balance goes up. And so it's weird to see. It's a tough concept to wrap your mind around. And you know, 25 years is a long time to pay. So you have to balance all kinds of things like, who am I inside? How do I feel about debt? Can I afford to repay this? I mean, that was the agreement I did. I got the loan with the understanding I was going to repay it. You have to know who you are. You have to know your circumstances. You have to know what life throws at you. Our point, I think the reason Deanna wanted me to talk with you today is that we come out of school and this stuff just hits us. It's like, well, here's your loan servicer and start making your payments. And you don't know why or how much or where did they come up with this dollar figure, or what if I can't? And so I'm hoping that you understand the places you can go to get help and understanding, and that there are options. All right, if we have mastered public service loan forgiveness, congratulations. And don't be afraid to email me afterwards if you're like, what was that? I did not get that. I mentioned defaulting. Defaulting is when you haven't made a payment for 270 days. Defaulting on your student loans is very bad. It has a bunch of repercussions that are just not good. So some of those things are listed there. I'm not going to dwell on this. The important thing with any loan, and including student loans, is if you're having trouble, talk to your lender. Lenders have options. Lenders have plans. Lenders see that people get in trouble. Lenders don't want to take you to court. They don't want your car back. They don't want your home back. Lenders want to work out something that will let you pay them back. So please do everything possible to stay out of default and to keep making payments that you have agreed on with your loan servicer. And then I want to give a couple warnings. Fraudsters are notorious, and particularly as you graduate and you are starting your loan payments, and they will get a hold of your name and they will try to fraud you. Because this is unknown, scary stuff, and that's where they thrive. And it's confusing, and that's where they thrive. So there are scams around just about every part of getting a student loan from beginning to end. Just be aware, be careful with that. You should know that at this point, student loans can't be put into a bankruptcy, so you need to figure out how to pay them. You need to come up with a way to do that. You guys are past getting loans for the most part, but we always counsel people that if you don't need the money, don't take it. And then an increasing trend we're seeing is people putting their own retirement at risk. This applies particularly to parents and grandparents, so not so much to you guys. But we're seeing a dangerous trend of people, older people, putting their financial life at risk to help someone get through school. So that's a warning we have for you. Here's those resources I mentioned. There's some places you can do some research about careers and jobs and how much that Bureau of Labor Statistics has incomes, salaries for different job types, if you're curious about that. And then your Career Center at CSU is a fabulous resource. So I hope you're using the Career Center. Related specifically to loans, there's a college scorecard, which might be interesting for you. The biggest sites that are going to help you with your federal student loans are studentaid.gov and the National Student Loan Data System. Studentaid.gov updates all the time. It is the official government site about federal loans. The information is accurate. I have found it to be actually fairly readable. You might have to dig a little bit, but it is accurate. It is not trying to sell you anything. It is telling you the true facts about your federal student loans. And so, like all the COVID questions, the answers are on studentaid.gov. All your public service loan forgiveness details, and there's a lot of them, it's on studentaid.gov. So that is where I was going to end with those resources. I'd be happy to take questions. I hope that has been helpful, not confusing, about what's going to happen in a few months. Yay, when you graduate. Usually you have a approximately 6-month period before you have to start repaying your loans. But again, your loan servicer will be in contact with you about where to send payment, how much that payment's going to be, a contact, contact information for them. Questions? I can't compliment you enough for hanging in there through that topic on an afternoon.
Will we have access to the slides you shared today, or?
Yes, absolutely. I'll send them to Deanna and she can distribute to whoever. You can pick random people out of the CSU directory and send them to them.
Yeah. Great question. We are recording, and so this is also going to be part of the Thrive-Grad webpage for the AEC, and it'll be under pre-recordings after today since it's already after the live session. So if you need to go back to the actual recording, you'll find it on our website. And then I'll go ahead and send out the slides as well, Nancy, if you're okay with that, to all of our students, for anyone who couldn't be here as well.
Yeah, I'll send you those when we wrap up.
Mm-hmm.
Questions?
I don't have a question, but I just wanted to say thank you for taking time to explain all of that. It made it a little less overwhelming for sure.
Okay, good. Yeah, it is a complex topic. And they change the rules now and then. So again, studentaid.gov, National Student Loan Data System, go to the place where they're keeping updated information that's reliable, that's not trying to sell you something. Find the official sites.
Yeah,
for sure. Thank you.
Thank you for sharing these links, Nancy. I will say that the student aid website is the same, where like folks are filling out FAFSA information. So when you log in, that's the login that they're asking for. And that's where you'll find all the information that you included in your slides. It has all the loan pieces that you mentioned, the repayment plans. That's where you'll see the links to the documents if you are wanting to fill out those repayment plan options for your loan provider. And so I agree, it's a reliable website, and that's where you find most of the information that you included in your slides.
Okay. Well, And Deanna, feel free to include my contact information if somebody has a question. But
Will do. Thank you.
yeah, I'm so impressed that you hung in there through that, through all of that, people, because it is, I don't know, it's just a tough topic.
Yeah, thank you. I will ask folks, students who, before you log off, to just take some time to give us some feedback as well. We do have a post-assessment on our website for this specific seminar, so thank you all for being here. So I'm going to drop the link here in the chat, and you can just open it up in your browser so that when you log off, you have it with you. So if you just want to take some time to do that really quickly right after this to give us accurate information, we appreciate you all being here. Thank you again, Nancy and George. Yeah, feel free to log off. Thank you all.
Yeah.
Absolutely. My bit of information would be is take advantage of this information, because when you leave college, the real world doesn't give you this information for free.
Yeah, and the real world's going to throw some confusing things at you, for sure. So, all right, thanks, guys.